This video is a quick look at the ATS Charts chart template overview, and we're going to be looking at all the ATS Inflection Point Charts as a group and learn how the lines are placed on the charts and how they're color coded so that you understand what you're trading against. I'm on our tradermembers.com site under products, which is open to the general public to look at this list of templates. This is a reference area for our traders to find videos on how to repair and rebuild charts and find reference material, what all is included. We have several charts on this charting package that are set up with our inflection charting. This is one that has the daily inflection. You look at the data series, and this is plugged in with a daily. They'll either be daily or 120 minute if they're intraday. We have several charts that have the template, and we're going to go over the setup of the lines. Here's another with an inflection daily as well on a very small brick size on our wick chart. This is a 15-minute chart. If you prefer standard candles, you can still use your standard candles on a 15-minute chart, or actually change the minutes, and so long as the daily stays the same, your inflection lines will stay the same. So you can break this chart down to smaller candle sizes. Here's another with a daily inflection. It's just the wick bar and the inflection point. I use that for trading sometimes. Here's a 60-minute running on a weekly inflection. Same type. The way the lines are drawn, that's what we're going to cover in the video in more detail here in just a moment. We're going to pull up an actual chart inside of NinjaTrader. This one is designed to set up for 5 minutes, but it's on the daily inflection. You can see the daily input here and the lines, and this is designed to actually change the minutes, as I mentioned before. And you can use 1 minute chart, 3 minute charts, 10-minute charts, whatever you like if you don't like to use the wick bars. I like to use both actually, but I trade off my wick bars. This is the intra-session bar. You see the 120 minutes. I'll explain what that means as we get the actual charts pulled up. That's the chart we're going to look at in more detail. But they're all the same. Here's another chart as well with the daily inflection points. And if you are new to our program, you can take any indicator on a chart and unclick visible and take that part off the chart. So if you didn't want to look at the cloud, you can remove the cloud from the chart simply by unselecting it as visible in the list of indicators, and then that part is gone. And then you just had the candles trading against the inflection points. And that works on any chart we have. This is a chart I use a lot for momentum, but it doesn't have the inflection points. And then this is my personal favorite. I like to look at my momentum that I'm gaining in my candles as I'm coming off of these levels. I like to look at the trend shift pivot zone, the red and green line. And so I reference this chart quite often on my day trading. And another thing that you can learn from our charts, I'm trading higher ATR stocks. I'm looking for that $1, $2, $3 move. If you take the exact same charts that I use in the videos that you see out on the internet where we're day trading off of, these are line breaks for days each day. You can take that same chart and apply maybe Bristol Myers or LUV, airline stock, or some of the smaller ATR stocks, and you will see the same exact patterns with the day breaks real close together, because they don't have a high ATR, but they create the same patterns on the chart. So as you learn the pattern setups, If you're a swing trader, you're looking for those multi-day, 2 and 3 day, maybe option naked calls, naked put trades. You use the exact same charts. They just are applied differently because it takes multiple days to make this multi-candle move. And then if you're trying to take the higher ATR stocks and do the same thing on a multi-day swing trade, then you want to take the input of the size of these candles and increase it to higher size candles from 25 to 50, 100, even 200 for something like a Tesla or a Boeing or something of that nature. This is the primary charts we're going to look at here in more detail, and I'm going to explain how these lines are there and how you can learn from going back in the history as well on the charts. This video is brought to you by Active Trader Setups Trading Package, a day trader setups company. Okay, we're going to take a look at the multi-day and intraday cloud that has the inflection points on it, and the color coding is the same on all charts. I got an opportunity here. I like to show this as often as possible. We show it on the website. When you got a glitch in a chart, sometimes you have to totally rebuild the chart, and we have videos explaining how to do that. Each of our reference videos on each chart template goes through the process of teaching about what's on the chart, and at the end of each video there's about a 5-minute section of step-by-step creating that chart from scratch. And we have the name of the actual chart template normally in the lower left-hand area. This chart here, I added this indicator at the bottom yesterday for some teaching purposes. But I want to show you a trick that quite often will fix problems first thing I try. I've got a chart here that's out of whack. I'm going to take the tab, right click, duplicate in a new tab, and many times when it reloads all the scripts, it will fix itself, and there you go. Load it back in just right. I'm going to draw this down, tighten it back up like it should be, and now that chart is repaired. So I can take the other copy and now close it, and now I have a good chart, and I can save my workspace, and it'll be there next time I open it. And this chart here had the same way. I know it's supposed to have more plots on it. I can see in my data box over here that I only have one plot on inflections. This is a daily inflection point. Now I could reload the chart template by its name by right-clicking and saying load, but that's not what the first thing I'm going to try is what I just showed you, duplicate in a new tab. And there's all the lines again. Now it likes to, when you do that, it likes to spread out these lower indicators. You just tighten those back up, and there we have a complete chart, what we wanted in the first place. So we'll go back here, close that, and now we're ready to go. Now I want to primarily focus on what you see on these charts. This is a ATS Inflection. D stands for daily. You see the daily up here. Same thing on this chart down here. And then these lines are produced from our indicator ATS Inflection Points. This intraday stock cloud has a 120-minute input, and it has the AT inflection. We call it intraday inflection points, or refer to it as session inflection points. It won't say daily. If it says daily, then it's daily inflection points. Now let me explain how the lines are set up, and then we'll look a little more detail on each of those two different settings, and whether you're on a 15-minute candle chart, 60-minute, 5-minute, or our wick bars, or even if you wanted to learn how to add a different bar that you may trade right on top of our inflection charts, you can have all our lines calculated just as you see them, but trade your bar on top of this. You could take this same chart and hide my bars, but don't take them off because you got things being calculated with those bars, and then add a 3-minute or whatever you like to trade. If you prefer that you decide you don't like these wick bars, you learn how to use these wick bars and manage your trades with them, you'll like them. But everything's not for everybody. We understand that. Okay, how the lines are set up. We're on the daily chart, regardless of any chart you're on. If you see these inflection point lines drawn, and we use the same scenario, we actually, on the futures charts, we don't plot inflection, but we do plot the VPOCs that are so highly traded on futures, and we use the same coding on the colors so that we can keep things consistent. The most recent line, if I slide this back one little tick, now this is blue. The most recent line as you're trading this day represents our inflection calculation points. This was the most recent line calculated, the bigger white dash bar. Same thing up here. If I slide this back just enough to change it, you see it up here. If I slide this down, you can see that white line way up here that's up there. It's the same exact value. What these lines represent throughout the day, they're there when the chart opens. They're actually plotted the last, that's the reason I had to move it, because as soon as it gets to the last tick of the day, it's what's going to be there all day tomorrow. So at the end of the day, you're looking at this chart. These lines are exactly where they'll be tomorrow. This is our inflection point that we plotted today to carry forward for tomorrow, meaning 1 day ago. This is our 1 day ago line. This is 2 days ago. We shift the color, stay with the dashes, smaller dash, and the solid white line is 3 days ago. After that, we go to orange, and they stay orange going forward. Now, the blue line will calculate across the chart all through the day. It's creating tomorrow's white line plot. So when I move this back, this slight dash, there's that blue line. All day long, our indicator is working with what's going on during that day, and by the end of the day, it's processed it all, and you end up with a new plot for tomorrow. At the time it shifts, this was during the day yesterday. This was the prior day's inflection point we placed, the day prior to that, and the day prior to that. Now, as soon as this shifts, this becomes the third day back, because it's 2 days back now. This becomes the second day back. So if I slide this bar to the right, you're going to see this line become a small dotted line, because now it's going to be 2 days ago instead of 1 day ago. And then this one become the solid white line because it's 3 days ago. And then this white line will go to orange. And there you go. At the end of the day, all that shifted. So now during the next session, this represents the most recent day, 2 days back, 3 days back, and then beyond with the orange bars. These are our daily inflection point charts. As you slide back studying your charts, as you can see when we first moved it, the color changed. Everything shifted back to where it was. As you go on back to the next day, watch these lines change colors. I shift back into the next day. See, at the end of the day, this was going to tell you during this session the prior day inflection point 2 days ago, 3 days ago. But as soon as we move it back into that day, now the prior day was this one. This was the one that calculated throughout the day and remained right there all day. These continue to plot. So as you're studying charts and going back in history, whether you see the lines on the chart, that's actually where they were that day. So you can study and see how reliable these inflection points are. This is where these lines were on this particular day. You go further back, they shift again. You can see this ended up holding there late in the day and was the pivot point for the next day's morning action. You have to, sometimes you get out of whack, you just hit the F on the Ninja Trader and it puts things back in the proper places for viewing. you can see, go back a little bit further. Now, further back, you're going to eventually lose the 10 days of data, and you won't be able to continue. But you can go back quite several days and do that. I'm going to switch over to the intra-session chart. The clouds and the candles are exactly the same. The color coding is exactly the same. We are the most recent plot, the one prior to that, solid white, the one prior to that, which is down here, and then you go to orange. Now, these are set on 2-hour increments. So when you see the lines early in the morning, let's go back to right as the end of the day, the market opens. I had to reload that chart. Sometimes when you load these after hours, you have to reload the template or the tab to get the lines to come back in. So that's what I did. Now I got this one over here, doesn't have them. Now this is out of place now, it's to the right. I can slide this back, get it back over here to the left, go back to this one and just remove it. And now I'm in TAC again, and I'll just save my workspace once again. So here's all these lines that are intra-session, okay? I'm going to back up a little bit. So we're coming into a new day to the right, and these are the last every 2 hours where we put an inflection point. Inflection point 2 hours prior, the current 2 hours. Going back even further. And there's pretty much between 3 and 4 2-hour increments on per day. So these orange ones are going back even another day. So this is giving you inflection points intraday session going back 24 to 48 hours. So as we move into the next day, what we have plotted is the latter part of the day is the most recent. The little dash one you can't see behind there was also the 2 hours prior to that, and then the 2 hours prior to that was this white line. So these are your most predominant inflection points early in the morning are the 3 white lines. So as we move forward, we're going up, finally got away from these, it held as support, and we're moved up to the third period back. Now we're going to switch these at a point in time here because this is very, very early. This is still just 9:45. It breaks through there, picks up a little volume. That's a 5-bar high volume. That's a 10-bar high volume came in. It's almost on all of our charts. And so this continued to break up. It's almost 10 o'clock now. Now, look what just happened. On this pullback at 10:30 now, this was at 10 o'clock. At 10:30, the low of this bar, looking in this guide to the right, the data box, the low print of that bar was 144.85. Our white dotted line is 144.80. Now, that's the most recent line. See, right here, the solid white line was going back 3 periods. The blue line was creating the most recent line. At 10 o'clock, that 2-hour bar technically was over, and then from 10 to 12, it'll make the next calculations 12 to 2 and 2 to 4. So right here at 10, it switched. The white line replaced the blue line. So that is the most recent trading period, which was only 30 minutes. But that created that first 30 minutes, that was our inflection point. It's going to carry forward till noon, and then it's going to shift down, and the lines are going to move around again. But when it came back here at, this bar closed at 10:30, this one closed at 10:05. So during the period, it went back and held the inflection point that we created in the first half hour of trading, and it bounced, and look what you got. So this was an early inflection point created right on the chart, ended up serving as support within 5 cents. Continued on up into a older inflection and ran into resistance. This is our most popular indicator and the strongest indicator I know out there. Now we pull back here. I have no idea. That's where it ended the day right there. That explains to you how these lines work, the difference in a session inflection point and a daily inflection point. Good trading. Check out more about our website, activetradersetups.com, where you can take our charts, apply your symbols, and create your own trade setups. You don't need anybody's help. You just need proper tools. Thanks for watching. Look forward to seeing you on our other videos. Be sure to subscribe to our YouTube channel while you're here. This video is brought to you by Active Trader Setups Trading Package, a day trader setups company